Ladies and gentlemen, good day and welcome to the Q2 FY24 earnings conference call of Anupam Rasayan India Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Sneha Salyan from Ernst & Young. Thank you, and over to you, ma'am.
Thank you, Michelle, and good evening, everyone. Welcome to Anupam Rasayan India Limited Q2 FY24 earnings conference call. Please note that a copy of our disclosure is available on the investor section of our website as well as on the stock exchanges. Please do note that anything said on this call which reflects our outlook towards the future or which could be construed as a forward-looking statement must be reviewed in conjunction with the risk that the company faces. This conference call is being recorded and the transcript along with the audio of the same will be made available on the websites of the company and the exchanges. Please also note that the audio of the conference call is the copyright material of Anupam Rasayan India and cannot be copied, rebroadcasted, or attributed in press or media without specific and written consent of the company. Today, from the management side, we have with us Dr. Kiran Patel, Chairman, Mr. Anand Desai, Managing Director, Mr. Gopal Agarwal, Chief Executive Officer, Mr. Amit Khurana, Chief Financial Officer, and Mr. Vishal Thakkar, Deputy Chief Financial Officer. I would now like to hand over the call to Dr. Kiran Patel for his opening remarks. Thank you, and over to you, sir.
Thank you, Sneha. Good evening and welcome to everyone to our Q2 FY24 earnings call. As we complete the first half of FY24, it should be noted that Indian economy remains robust while the world economy continues to exhibit volatility. The global economy is grappling with economic slowdown and elevated inflation. This impact has been more pervasive and persisting across many nations. The agrochemical sector, in particular, for the last couple of quarters, has seen the oversupply from China, coupled with excess channel inventory that has led to pricing pressure on agrochemical companies, specifically in the generic chemical segment, which is cause of concern to the chemical players across the globe. We expect the prices to stabilize and the excess inventory to rationalize by the end of CY23 and expect the demand to strengthen over CY24. On that note, let us move to the Anupam Rasayan's performance. Our H1 revenues were rupees 794 crores, giving us a growth of close to 11% year-over-year. Our expertise on working on niche products with innovative and contractual demand minimizes our exposure to volatilities of the market, allowing Anupam Rasayan to have a higher revenue visibility, which plays a pivotal role in sustaining our growth. I will let Anand discuss the business performances in detail. Speaking on our sustainability efforts, we are continually pushing the boundaries with new initiatives aimed at protecting our ecology. I am happy to announce that we have signed 3 MOUs with Government of Gujarat for aforementioned of afforestation of a total land area of 150 hectares. 50 acres located in Narmada district, 50 hectares in Tapi district, and 50 hectares in Surat district. We have the capacity to plant more than 166,000 trees in these desolate areas. This project will be integrated into the Greenbelt Development Program, which involves the utilization of designated lands by Gujarat government for the purpose of planting and caring for various tree species. These afforested land parcels will act as carbon sink and shall make significant contribution to our objective of reaching the net carbon neutral with respect to our energy consumption by 2027. Further, we have started disclosing Scope 3 greenhouse gases emission data in our last ESG report, making us one of the few chemical companies in the industry to do so. On this positive note, I will now hand over the call to Anand for his opening remarks. Over to you, Anand.
Thank you, Dr. Patel. Hello and good evening, everyone. Welcome to our Q2 FY24 earnings call. Let me provide some color on our performance for the quarter, and then I will move on to business updates for the quarter. Our total revenue for the quarter stood at 396 crores, with a YoY growth of 3% on a consolidated basis, whereas for the first half year, our total revenue stood at 794 crores, posting YoY growth of 11%. Amidst the challenging external environment, I am happy that we have been able to hold our ground and deliver growth. That said, we are seeing a resurgence in demand, which instills confidence of delivering growth in the coming quarters. Moving on to the business updates. In Q2 FY24, we launched 3 molecules, which translates to a total of 5 molecules launched in this financial year, taking the total number of products to 58. Our product pipeline includes 5 molecules, which we plan to launch in coming 2 quarters. As of 30 September 2023, we have LOIs and contracts signed worth rupees 7,669 crores, giving us strong visibility for the coming years. In FY23, debtors got stretched on account of higher sales to large strategic global customers, coupled with domestic sales, which has a higher debtor cycle. We expect it to normalize in the next 2 quarters. Collection in October gives us confidence that the same will be achieved. Another important update for the quarter is that we have Mr. Gopal Agarwal joining us as our CEO. He has 25 years plus experience in corporate strategy, global and domestic M&A, fundraise, and management consulting. He has extensively worked for Indian companies and MNCs across US, Europe, and Japan, and his core specialization, among others, has been manufacturing and industrials. Also, I have known Gopal Bhai for the last 15 years, and he knows the company very well. The stage at which the company is today and growth that we are seeing in the medium to long term, the expansion of the management bandwidth is very essential. So, contribution of Gopal Bhai in this growth will be very pivotal. On a concluding note, our order book remains strong despite the challenging environment, giving us a good visibility of robust growth for the current financial year, and we are positive on maintaining our guidance of 20% growth with similar margins. Before our CFO takes you through the financial highlights, I would like to hand over the call to Gopal Bhai to introduce himself. Over to you, Gopal Bhai.
Thank you, Anand Bhai. Good evening to you all. I am really excited to join the team at Anupam Rasayan, a company known to me for over 15 years now. I have seen this company grow from nearly 100 crore to a market cap of around 10,000 crores today. My endeavor would be to use my past 25 years of experience and act as a catalyst to augment overall growth of the company. My idea would be to make the company globally competitive, future ready, to be able to grow it manifold from here. I also eagerly look forward to meeting you in person who have been tracking Anupam growth story to gain your valuable insight. With that, I hand over the call to our CFO to take you through financial highlights. Over to you, Amit Dar.
Thank you, Gopal Bhai. Good evening, everyone, and thank you for joining us on the call. Let me take you through the financial highlights for the quarter, and then we'll hand over the call to Vishal Bhai to discuss the same further. Let me begin by an update on the CAPEX. The planned announced CAPEX is approximately rupees 670 crores. Out of this, we have spent rupees 234 crores till Q2 FY24. Majority of the CAPEX is being used to cater the contracts and the LOIs we have signed. This quarter, working capital got stretched largely due to increase in debtors, which is temporary and will come down in Q3 FY24 and Q4 FY24. And our guidance of lower working capital days of less than 220 days still remains the same. We see better growth in H2 FY24, which would improve the working capital cycle. Anupam Rasayan continue to maintain its margin. Further, cash equivalents on the books as on 30th September 2023 is at rupees 404 crores. Coupled with expected cash generation in the coming quarters, it would be sufficient for the planned CAPEX. With further reference to the recent capital infusion announcement of rupees 550 crores through a preferential issue with participation from the company's promoters, these funds will be primarily used to retire the company's long-term debt. This strategic debt reduction will lead to decrease in interest costs, thereby making it EPS accretive. With this, I hand over the floor to our Deputy CFO, Vishal Bhai, who will take you through the financials in detail.
Thank you, Amit Bhai. Hello and good evening, everyone. Thank you for joining us here today. I would like to briefly touch upon the key performance highlights for the quarter and half year ended 30th September 2023. And then we will open the floor for the question and answers. Before I proceed, I hope you all have had the chance to go through the detailed presentation submitted to the exchanges and uploaded on our website. Kindly note, our numbers for the quarter are on a consolidated basis and they also include contract numbers. Let me first discuss the consolidated financial highlights for the quarter ended September 30th, 2023. Total revenue for Q2 FY24 was at rupees 396 crores as compared to rupees 383 crores in Q2 FY23, up 3% YOY. EBITDA, including other income, was at rupees 111 crores in Q2 FY24 as compared to rupees 101 crores in Q2 FY23. The growth of 10% YOY. This would also translate to an EBITDA of 28% EBITDA margin for this quarter. Profit after tax was at rupees 49 crores in Q2 FY24 as compared to rupees 48 crores in Q2 FY23, a growth of 2% YOY. Coming to the half year performance, total revenue for H1 FY24 was at rupees 794 crores as compared to rupees 718 crores in H1 FY23, up 11% YOY. EBITDA, including other income, was at rupees 225 crores in H1 FY24 as compared to rupees 190 crores in H1 FY23, growth of 18% YOY. This would also translate into an EBITDA margin of 28% for the half year. Profit after tax was at rupees 101 crores in H1 FY24 as compared to rupees 90 crores in H1 FY23, a growth of 12% YOY. For Q2 FY24, our licenses segment contributed 87% of the total revenue and the balance came from the other specialty. Our top 10 customers contributed 83% of the total revenue and there are total 24 products that we provide to them. With that, we open the floor for Q&A. Thank you.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask questions may please press star and 1 on their touch-tone phone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Ankur Periwal from Axis Capital. Please go ahead.
Hello. Yeah. Hi, sir. Thanks for the opportunity. I hope I'm audible.
Yes,
Yeah.
you're audible.
Yeah, great. Thanks, sir. Sir, first question on the revenue growth overall. You did mention that, the growth was largely led by the domestic client. But just trying to understand, this is the existing clients and the stretch in working capital is more a timing issue, and how do you look at that?
Ankur, rightly identified. So these are all customers that we have been doing business with. There are very limited number that we have added in the quarter for the additional, and then the revenue from them is not that meaningful for now. So all the revenue that is coming is from the existing clients principally, and we are very comfortable in terms of their payment cycle and all. So what we are seeing today is a very temporary phenomenon in terms of data expansion, which we feel that it should come down in next 2 quarters. And if you see the first 1 month of the revenue or collection, we feel that numbers have started unwinding, and we believe that it's only a temporary phenomenon. So I agree with you. Ankur, nothing much that we really see beyond a couple of quarters here.
Sure. And sorry, I missed the breakup between the domestic and export. If you can help with that as well.
Yeah. So domestic is around 55%, and 45% is domestic and 55% is export.
Okay, fair enough. And this domestic customer that we are talking of will be a part of the top 10 customers, right? And existing ones.
So few are, and few are not in the top 10, but yes, few are. So.
Oh, it's not one customer. There are multiple customers. I thought it was one customer.
Yeah. There are multiple. There are multiple customers. Not that it is only one customer that is.
Okay, fair enough. From a export growth perspective, or probably in the first half we have degrown here. If you can help us understand, is this largely because of the RM deflation pass through? How do the volumetric growth stack up here, and what will be our current capacity utilization?
So Ankur, if you look at it from the growth point of view, I think the year-end numbers, if you see, we will be fairly there. Our large clients in the export market has actually talked about pushing the demand to the next 2 quarters, which is H2. And when you will see the H2 numbers, we will be able to see that the numbers have been more in line with what the normally that you have been seeing or we have been seeing. So that's there. And on the capacity utilization side, as we have been mentioning, that the revenue that we can generate from here is around about 17 to 1800 crores. So to that extent, one, and second is also these are all input plants. So we try to play with the demand that we have, but we have enough and more capacity to continue. Last question that you talked about, volume versus price deflation. I think price deflation has not been a very, very significant impact in terms of that. The volumes have also been robust here. Also, we would be if you see my RNC would be in the range of 40s, and that the impact of that in terms of my realization is limited. No doubt there will be some couple of percentage points moves there, but nothing very, very drastic that we can see from here.
Sure. That's helpful. And just from in the initial comments, we did mention that the generic part of the market is facing slightly more pressure. How does our portfolio stack up right now between, let's say, generic, patented, and maybe the recently off-patented products?
So if you historically also and today also, if you look at my portfolio in terms of my newly launched, if you're patented and recently off-patented, we will be translating into anything around 70-75% and above. And 2 is also the long generic product. Even there, we will be working with an innovator, and that's one thing that really helps us in terms of defending, having a higher visibility of revenue and also the margin stability, because these are all those. There is a limited number of products which are generic multi-customer products, and that really helps us insulate our demand and margin.
Great, Vishal. Just last bit, slide number 17 of the presentation, which talks about the R&D as well as the business development team globally. What is the arrangement that we have with all these representatives across the market? It is more on a business generation basis, or how should one look at it? I'm presuming none of them is on our rolls. So.
No, so these are all, if you look at it, they'll be on the retainer side. So basically, they are our employees. They work exclusively for us on this topic. Majority of them, one or two may have other assignments, but largely they are all for us. And then, yes, as a business development team, always there will be some bit of a performance incentives that will be there. That's the standard customary thing that we would have. But they work quite extensively with us, and they are more on a retainer kind of approach. But as you know, as an Indian company, you would not want to spend so much in terms of international costs, and hence you would always structure it in a manner that there is a very pragmatic balance of retainer versus incentives.
Okay, great, Vishal bhai. Thanks for all this. I'll get back into the queue. Thank you.
Thank you, Ankur.
Thank you. The next question is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you and good evening and welcome to Gopal Bhai. So if I may just take the balance sheet first, it's a bit surprising that the receivables have gone up and you have been guiding for a reduction in the working capital cycle. So did you have to extend additional, time for payment to the new customers? And when you say you expect it to come down, what is the, basis for that confidence? Because if suddenly the receivables go up in terms of number of days, it seems to me that implies that you're given extended credit terms. So how do you expect this to, be brought down in the next 6 months? I would like to understand that.
Sure. So Ramesh, 2-3 things. One is, if you look at it, we have supported our customers with an extended credit or little longer credit terms than normally that we would have done. We do it. But that is very clear understanding that it is a temporary support to them and it's not a long-term support to them. One. Two is, if you come and see there is a bit of a more of sales to the domestic customers, which has to be in this quarter. If you see the sales, which is on the higher side on the domestic, which is a little longer period in the first half. And I'm talking the first half. As we go, that number will only drop because of an indication of customers in terms of their payment profile. And two is also, if I look at the first month after the first half, so which is what is passed by, we are seeing a fair bit of a collection coming in stream. So that are the 3 reasons why we are really feeling comfortable that we should be able to come back to that number. And historically also, if you see, this is something which we don't see too much moving around. A quarter or 2, it can happen, but we don't see it anything long term here.
Okay, and it's interesting that you have planned to raise promoters' equity, which is a welcome step. So when do you expect the promoter funds to equity and the warrant to come in? And when do you expect to repay the debt, and how much of the equity proceeds will be used to repay debt?
Okay, so first, so we have got a board approval now, today, in fact. So we'll run it with the shareholders' approval, which takes its normal due case of 21 plus few days of operations, and post that we will be able to bring that money straight into the company. So maybe by the first week of December, kind of first week to second week of December, we should get the money into the bank accounts. If you look at it, of that amount that we have got, majority it will be around about 80% odd kind of a number that we would use to just repay the debt straight up. But as you can appreciate that this will be in 2 parts. One is part of it is pref and the part of it is warrants. So the pref will come straight. The warrants will have only 25% coming in now, and then the balance will come within the 18 months. So to that extent, whatever money we get, largely the first tranche will largely be used to just repay the debt. And today we have around 400 and something odd crores of long-term debt, which we'll try and unwind as soon as we get this cash. So we'll try and line it up accordingly.
Okay, and incrementally, if you look at the expansion of the business based on execution of the LOIs and the contracts, and once projects are commissioned, will there be any incremental requirement for additional working capital that will again require you to borrow funds once this capital infusion is done?
So let me first answer this is, if you look at for the money that I am sitting on today is around about 404 crores of cash, which will be sufficient to do my capex. So that is one point there. And second is, if you look at the growth that I am seeing in terms of the revenue as we go forward after the capex comes into place. Today, if you look at it, there is a reasonable amount of working capital which is locked in, which will also get released. And two is also, if you look at the over a period of time, the EBITDA that we generate and the cash that will operating cash flow that will be generated, we see that it should be fairly balanced to really not expand our working capital limits that we have today anything significantly. Maybe in 2 to 3 years, when the revenue goes beyond, let's say, 2,500 crores is where you may see a few things. But today, for next year and a half or two, I don't see that anything very significantly from.
So one last thing on your operating results and how to what to expect for the second half and the next 2-3 years. So if you can give some sense of how much of your first half revenue and the 2Q revenue was from fluorination in terms of percentage, how you see that move in the second half and over the next 2-3 years, and what is the kind of visibility one should expect from the LOIs and contracts in terms of addition in value terms in rupees crores over say FY25 and 26 and then beyond 26. You can break it up; it will be useful.
Sure. So let me first start with the fluorination part of the story. In fluorination, the first half we had around about 15% of revenue coming from fluorination, and we expect that the number would hit around about 20, just around 20 by the year end. And if you look at a long-term view, I think fluorination should contribute around about 25 to 30% or 30% odd kind of a number for us in terms of our revenue portfolio by that time. And mind you that this number is a number which is 30% of that expanded revenue. And to that extent, you can imagine the kind of revenue that we are talking about here. So that's one part of it. Now let's come to the LOIs and contracts. We believe that for LOIs and contracts, we should be able to continue to grow, and in 2 to 3 years time, around 3 odd years, which is the typical ramp-up period for that, we should be able to get to around about 4-digit number in terms of my revenue by the next 3 to 4 years time frame. I think that's what we see, because it's a staggered LOIs that we have got, and the ramp up also has its own staggered approach, and that is where we would see this to be.
So in 2-3 years, you are saying the addition will be about 1,000 crores from the new contracts and LOIs.
Order of magnitude, yes, you are right. Order of magnitude.
So another housekeeping question, let's like the export domestic split. Can you give us what is the split between contract revenue and revenue outside the contracts for the second quarter and first half, and how you see this moving, say, in the next 2-3 years?
So historically and even now also, most of our revenues are largely on the contractual side. Around 70+% is more on the contractual or contractual behavior revenue. And I think there is not much of a movement that you can see. There may be some kind of a scheduling part of it, and you can see a bit plus or minus on that, but principally you will see the same number as you see. Even for this year also you will see the same, and going forward also you will see that.
Thank you very much, and I will join the queue.
Thank you, Ramesh. Thank you for that.
Thank you. A reminder to all the participants, anyone who wishes to ask questions may please press star and 1. We will take the next question from the line of Rohan Gupta from Nuvama. Please go ahead.
Hi, sir. Good evening, and thanks for the opportunity. So my question is, first of all, on our business model, where we are completely selling to a mechanical industry, both generic as well as the innovator. Right now, sir, both of them are going through extremely pain point. While in generics, we see that the biggies in India, they are facing extreme pressure. probably they may continue to exert pressure on our working capital, and we may see some more delays in terms of collection from them. That is on generic. However, in innovators, they are seeing that the global destocking, inventory destocking continuing. That may, and even in the year-end balance sheet, what I understand that they will try to strengthen their balance sheet. With all these, probably the near-term money coming back from these customers, both in generics and innovators, looks challenging. So how you respond to that, sir? Number one.
Rohan, so you're right that it's not an easy conversation with our customers, and what you rightly identified is yes, they would want to strengthen their balance sheet and would want to pass part of it to us as well. And for some time, every supplier would always accommodate their purchasing partners. But if you look at it, the way this is right now modeled, or the way we have been interacting with our customers here, we have been supporting them, and it's a very clear conversation with them as well that the realization that we need to have it in time that we need. So what we have seen from them is that there is a very clear acceptance of the plans that we have with them. So to my mind, that will not be a big challenge. Second is, if you look at it, large part of it is coming from the innovators. And if you look at innovators, especially in the international sphere, they have been, what our understanding is, their challenges were more on the Q1, Q2 ours, or Q2, Q3 of theirs, and maybe at best will go to Q4 of theirs, which is Q3 of ours. So we see that pressure is organically also easing out. But even having said that, we believe that there is a very clear path to this number, and that's where I am also saying that even when I look at the October's collections, that gives us a reasonable confidence that we should be able to come back to normalcy in terms of better collection, and we should improve on the inventory piece here.
Sir, in terms of LOIs which we are expected to commission over next couple of years, with the current weakness.
I'm sorry to interrupt, sir. Your voice is not that clear. I would request you to use your handset if you are using your hands-free, sir.
Just a second.
Thank you.
Sir.
Yeah, please go ahead.
Sir, I was saying that with the current weakness in the global market, how we see that our LOIs, there is a chance of spillover. They may push back maybe for 1 or 2 or 3 quarters. How confident we are that all the LOIs are expected to come within a time frame?
See, you're right that environment and that kind of movements happen, but we also plan our numbers, and these all are budgeted. And today, after whatever development we have seen, whatever the activities that we have seen, there is no reason for us to move this number anything significantly expectation. Now it's a quarter or two. Just that conversation can always happen. That's not a question. But if you look at it, it's a portfolio, and if you look at it, the total portfolio is a large portfolio, both from my existing molecules and also the pipeline molecules. Just to give you a context, today, this year itself, we are going to launch 10 total new molecules, right? So if there is a bit of a movement on one product to other, then you always, and that's an advantage of a multi-purpose plant as well, right? That if let's say one thing is steaming slower, then you just move to another part and use the asset for that, because that's a total portfolio of products that we have. And to that extent, we really get comfortable with the kind of growth that we are seeing here, right? Having said that, yes, I would not guide for a quarter-to-quarter number, because yes, this is not a world and this is not a business where we can talk about quarter-to-quarter. But if you ask me annual to annual, I think the consistency will be fairly representative. And to that extent, I echo you.
Sir, just the last bit from my side. So the reason for press issue, is it primarily just to show that the confidence in stock price the promoter wants to show, or it's a real need of the money? Because I think the partial money is only going to come in near term and another borrowing issue. So is there any significant debt reduction which is expected, or it is just only showing that promoters showing the confidence in the stock?
I would put it this way, that if you see Anand Desai, who is the founding promoter, he has been desirous of increasing his shareholding in the company, right? And that has been the primary driver for this press. Yes, along with that, there are other investors who have joined along. That's fair, but the original thought and the principle was that, and that's the driver. Now, balanced debt reduction is just to ensure that we have a better, we do not impact the ROC of the company with this one, because we don't need, beyond the point, the business does not need cash beyond the point. So that is also the reason. And yes, it will help a bit on the EPS accretive behavior, but primarily the thought originates from the founding promoters, desire to increase his stakeholding in the company, and that's where we come from.
Thanks, sir. That's from my side. Thank you.
Pleasure.
Thank you. We'll take the next question from the line of Rohit Nagraj from Centrum Broking. Please go ahead.
Yeah, thanks for the opportunity. So first question is our guidance for FY24 and 25. So what are we expecting in terms of top line growth and margins for both these years? And how much of this top line growth will be contributed by the LOIs? I understand FY23, the contribution from the LOIs was closer to some 100 odd crores. So what do we expect in FY24 and 25? Thank you.
Perfect. So Rohit, let's first answer the first question in terms of my revenue growth guidance. So I would not want to give a specific year-to-year guidance, but I can definitely say that my revenue growth will continue to be at least this first half has been more on the tepid growth side. But I think the second half onwards and year, I think we should be able to get back to the growth momentum that we had in our historical revenue growth. So from H2 24 and FY25 onwards, you would be able to see that kind of a growth that we are seeing. And for the FY25, my increment from today would be around about 400 crores by FY25 from today.
Okay. That's from the contribution from the LOIs you're talking about, right, sir?
Yes.
Correct. And in terms of the confidence that we are having that second half would be much better than first half, is it backed by any firm volume commitments that we have engaged with our customers, both domestic and global, or is it based on the general commentary by global players that the inventory destocking is coming to a fag end? So ideally, the situation in second half should improve. So your thoughts on this? Thank you.
So Rohit, let me answer the second question first, and then I'll answer the first one, or clarify on that. The first is that in the CSM business, I would really say that we are more driven by what my customer is doing for that product and product range rather than about the general market. So you are right that the commentary of a larger industry statements are not to be picked up as our anticipation of our business as we go, and that I agree with you. So what we tend to do when we want to look at these growth is that what's the kind of demand indication and the offtake that my customer has given me. As you know that every large MNC, especially in the CSM side, would give an annual forecast for us under the contract or an LOI that we have, and that is the reason why we see that even when we were in the Q1, we said that Q2 will be flat, was for the same reason that we knew that customer has requested us to push the demand to the second half. And now when we are talking to them even in Q2 and now, we see that they are saying that there will be we are uptaking, and that's the forecast that they have given us. Second, also the launch of new molecules will also aid to the additional growth that we are seeing. So it's not only the organic growth of an individual molecule, but also the addition of the molecules will contribute to the growth to us. So it's a combination of two which will be there. and that's where it gives us a fair bit of a confidence.
Right. Just one clarification here. So, say base business of FY23 without any contribution from the new LOIs. That base business, generally, what should be the growth rate that we can assume, given that most of these molecules, I mean, it will be partially established molecules and partially new molecules. So what could be the average growth rate for that base business?
So the base business, I would not, I don't want to segment it that way, because because in any company, if you look at my history also, I 5 years back or 7 years back, I had only 4 products, and that was giving me the revenue. Today, that number has gone to 55, 57, and 58 now. So I would not say the base revenue and others. But if you are asking me, yes, the existing molecules typically with my existing customers will typically hit the kind of not a plateau is not the something, but they would have taken care of the large part of the potential. So the growth from there would be let's say 15 to 25% of the growth, additional growth would come from there, and the balance additional growth would come from the new molecules and commercialization and ramping up. If that helps.
Right. And just your broader guidance on the margin profile for next couple of years, will it be similar to what we are currently having, or will there be any chance of further improvement?
I would really tend to guide at 26 to 28, though we have done 29, but I would always caution that 26 to 28 is a fair guidance that I would want to give. If we perform better, we would definitely be happy, and that's our endeavor as a management, that we improve every single bits of my EBITDA margin. But I would not want to stick my neck out and try and say more, because I would want to be more conservative here. Yes, we have been doing it. Yes, there is a buoyancy that we can see in terms of the margin profile, but I would want to be conscious and cautious here. And the reason is not the situation, but just being financial bit more prudent on this.
Right. Just 2 clarifications. 26 to 28 is on standalone basis. Is that assumption right?
Yes, but if you look at Concall also, Concall, yes, Genpact will play its own. Typically, if you see historically, we have been guiding at 26 to 28, and I think that's where I would go by.
Right. And just one clarification, you earlier told that fluorination revenues are currently at about 15%. So this is on consolidated basis, or is it only on standalone?
No. Sorry, that's on a standalone basis. Because if I take the Genpact, then practically the whole revenue gets into the fluorination side of it. So
right.
A large part of it doesn't. So no. I'm talking only a standalone. Yes.
Sure. Thanks for answering all the questions, and best of luck, sir.
Thank you for this.
Thank you. The next question is from the line of Krishan Parvani from GM Financial. Please go ahead.
Yeah, hi sir. Thank you for the opportunity. Just a couple of clarifications from my side. So you have done about 170 to 190 odd crores capex in the first half. So how much are you expecting to incur in second half of 24 and FY25?
So if you see, we have totally announced around 670 crores of capex. Till date, we have done around 234 crores of capex. So in the next balance period, we should be able to do the large part of it in next 6 to 9 months time frame. Because I will tell you, the spend is one part of it, but the committed capex, like I would have ordered the vessel, I would have paid less than 10%, 20% advance on that. But the moment the vessel comes in or the reactor comes in, I'll have to pay the balance 80% straight up. So it may look little skewed in terms of money spent, but if you look at from a work done perspective, this number will be very different. And that's the reason I'm saying that for next, because it's at the fag end of the construction where all the equipment get on the site and gets erected, and that's the time when you spend the large part of your money. And that's where you would see that in the next 6 to 9 months you will see a large part of the utilization balance.
Yeah, sure, understood. So that is 670. I mean, that is for 24. So there's no change in that. So that was part number one of the question, and part number two was for FY25. How much are you envisaging? Around 300-400 crores, or even more?
No, I don't think so. We have gone through one large capex cycle now. So now whatever the next year's capex will be more on the maintenance and routine side rather than really a large capacity addition kind of a thing. So I don't see that number to be in that at that range. I would wait for a quarter or two to really give you the guidance on those capex numbers, but I don't see that in a significant number for now.
Okay,
Not
so
like what you're seeing. So you would have to right now. You should budget a routine maintenance and some bit of a debottlenecking expansion kind of activities rather than the large capacity addition kind of a thing.
Yeah, because I'm asking because let's say if I look at from FY18 to 23, there has not been a single year where we have spent less than 200 odd crores. So I mean, there has been some sort of capex ongoing. I mean, because you'll have to continuously growing even in 26, right? So you will have to incur some capex. Otherwise, then 26 growth for the LOIs that you have signed, you might not be able to kind of execute it. Is my understanding correct, or am I missing something?
So okay, let me answer it first. And so the LOIs largely you will see that the capex that I have done. Let me put it simply that the current capex will take me to 17 to 1800 crores. The 670 crores of capex, another will add around about 1100 1200 crores. So if you look at it, we are talking about 28 to 3000 crores of revenue from these capex. So to that extent, I have a breather. But you're right that some of the other capex may come up, like let's say it's a solar investment or any other investment that may come up. But these are all, that's what I'm saying. It's not in the range of 300 to 400 kind of a number. It will be in the range of, I don't want to hazard a guess, and that's the reason I'm holding back, because I would rather come with a fair number to you for the next year or going forward. But the numbers are not about large capacity addition. It will be more debottlenecking, maintenance capex, and if there is some bit of any other green energy project or something of that sort that may come into play. But it will not really swing to the numbers of 300, 400 for now.
Noted. Thank you. And the last bit of clarification.
Sorry, I have not been more clarificatory than this. Apologies for this. The next call I will do that for you.
No, that's completely fine. I mean, appreciate your honesty. That's completely fine. So the last bit I wanted to understand is, so what is the status of the 6-month pricing agreements with our customers? So is it done for the customer whosoever we wanted with, or is it is any customer that we thought to do a 6 months contract is anyone pending?
No, there are a couple of ones that are pending. I would really say that there is around 60% of my contracted revenue. And what will happen? Two things will happen. We are working with them, and they are also saying that we are agreeing to, but let's find the right time. This for them, this is the right time, and the world is so volatile to move to that one. And two ones adding in will only change the mix in favor of where we want the pricing structure to move to. So that will continue to happen. So I think we are in the right direction, and hopefully we should be looking at it that we get to where we want to.
Okay, fair enough. Thank you for patiently answering my question, and wish you all the best. Thank you.
Absolutely, thank you for this.
Yeah. Thank you. The next question is from the line of Meet Vora from MK Global. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I wanted to know your thoughts more on the LOIs that we have signed in terms of, whether these are more of a building block kind of a nature, or do we see these how do we see these molecules panning out in terms of incremental inflow of LOIs from these existing customers? That is one. And second is, what was the moat that we had in terms of, getting these LOIs over last, few months, so to say? Is it more that we acquired Tenfac and we had the building block of HF, or is it more that, we have built a kind of business development teams in Japan and US, which drove these kind of inflows?
So I think, Meet, to answer your second question, and the one is that, see, any business there will be multiple activities or multiple pivots that will play its role to get to the business. One, the most important thing is that do you have a chemistry and ability to deliver that I have developed this product and I can deliver. So that's the first, which is the technical competence that you have demonstrated, which we have demonstrated over the last 5-7 years actually. If you look at it, we have more than 30 plus products in our portfolio, which are fluorinated products. Then the second is ability to deliver coming from a supply chain side, because these are all products which are largely into so basically these are all where the supply chain is very, very essential, and there Tenfac coming in really helped to demonstrate that we have a supply chain sorted out here, and that led to the crystallization of the conversation that we have been having with our customers. Third, yes, having teams on ground in the geography that we are looking for business always helps from two things. One is from the speed of execution, and two is from the demonstration of commitment perspective, and three is the familiarity of the individuals who go and meet the customers. All these three really help in accentuating and improving the crystallization process further in terms of our business. And last is to be able to demonstrate that we have enough and more capacity and plans to deliver. So all these 4 points really play out, and to us, that's what is strategy. That's what is the execution that has happened. So I mean, I would really say that these are the four, five key things, key development that has really helped us here.
Understood. So that's one. And second is, so we mentioned that we are sole suppliers of some of these molecules from say Asia. So is this that we are seeing incremental demand in these molecules, or incremental supply shift away from geography that we are seeing, primarily in terms of the and where do we see the competitive intensity in these LOIs?
So I think, as you can see historically also, the large part of our business is where we are competing with the European and Chinese players. Now, in that scenario, always three things help us, right? One is the lineage that we have, or four things that happen. One is the lineage and the experience that we have given our customers, and they are the guys who are either they are offering us new products, or they are their peers are offering us, and we are able to attract the customers there. One. Two is the product portfolio. Please understand that this is very, very essential, that our ability to demonstrate to our customer that we can offer a high quality product on a consistent basis is very, very key. And third is supply chain, which is again the one. And the last one, what you rightly said, that competitive intensity. Yes, if you look at my European peers are really today, becoming less and less competitive compared to us. And from a China side, they are becoming less and less. Chinese peers are becoming less and less preferable compared to us. So these are the broad things that really play out, and that's where we would put it at. And also one more thing that happens is that we work on a value tree. So when my customer sees that okay, the products are falling in a particular tree or particular value chain, they would be more they will have a higher propensity to offer that to me, because I have demonstrated the value chain, supply chain, and ability to deliver. So these are the ones that I would put it here, which has helped us.
No, so that's helpful. And so just one last bit. Sorry for dwelling on this again. In terms of our working capital, when we say that we are trying to bring it to say 230 or 200 days, what are the kind of arrangements that we are working with customer, if you can highlight on that? And at the same time, whenever we are trying to reduce the working capital, will we see some kind of margin correction in terms of our overall EBITDA margins to deliver the products say early, or try to work? If you can highlight on that, that would be helpful.
Okay. So let's break it into two parts. One is if you look at my working capital today, the expansion of working capital largely on the debtor side, which is basically adjusting for a quarter or two. So I don't see that really. It's a very clear understanding with the customer that I've extended the working capital cycle. I have extended the credit terms, but it's not for a long period. It's a short term that I've offered them, which we have started seeing that it is coming back. So that's one part of it. So if you look at if I adjust for the debtors just from where they were to where they will be, okay, then I'm knocking off around about 50 odd days of my cycle anyways from first. And on the inventory side, it's just that the moment the revenue picks up and the inventory starts unwinding, I think we should be able to bring that also to a more reasonable level. So put together, I think there I see fair bit of a comfort here. It's a quarter. It's a couple of quarters discussion that we are talking about here.
Understood. Thanks so much, sir, and best of luck.
Thank you for this.
Thank you. Ladies and gentlemen, this will be the last question, which is from the line of S. Ramesh from Nirmal Bang Equities. Please go ahead.
Thank you very much for this follow-up question. So you had an agreement with the TI Group for an alliance in CDMO. So how is that progressing? What is the thought process behind that? And when do you see that actually culminating in some kind of impact on your P&L and balance sheet?
So first look at the MOU that we have with him, with the TI and 3Expa is primarily on really developing newer molecules. They have an understanding in terms of the pharma market, and we have a strength in terms of our chemistry and our process part of it, which is what is really helping, which is what we are trying to leverage between us. Mr. Govindraj, as you are aware, ex-MD of Aurobindo Pharma, he is the one who is guiding us on the interaction with the innovators, because that's where we need the understanding that which segment to go to, especially on the innovator side. So that's what we're going to do. Our chemistry strength, flow chemistry, and molecules, and also starting from the base molecule is only KSM level is helping us in this. So it's a very symbiotic relationship. When do we see it? It's a very initial stage, and excuse me, sorry. It's a very initial stage in terms of trying to tell that when this will translate into revenues. Probably the collaboration has started. We have been working jointly. Give us few quarters for us to really say exactly what kind of numbers from when we can start seeing.
Okay, and just one last thought. Now, if you look at the supply chain issues, inventory, and China's excess supplies and dumping at distressed pricing, how much of impact has it had on your business in the first half, and how do you see that shaping up, say, in the second half of the year and then FY25? What is your reading of that situation? But that seems to be the biggest overhang for the entire chemical sector as we speak today.
No, you're right. See that is there, and that's an overhang for the chemical industry at large. But as what our MD and even chairman said in their opening remarks as well, that impact is large significant on the earlier part of the value chain, which is where the impact is far higher and significant. When you come to more a CSM kind of a one-to-one relationship with an innovator, then that impact is fairly less, and with the kind of a pricing structure that we have, where we have a pass through in terms of cost structure, we see that that impact is practically passed through, because it either is impacting in terms of the input cost or any other kind of a cost, which just gets passed through for us. And to that extent, we are reasonably insulated in that sense. The only thing that it can also do is move the demand by a quarter or two, but demand growth by quarter or two, but nothing really significant that we have seen. At least till now, we have seen anything of that sort in our performances for now.
And do we see this abating, say, by FY25? What is the current rating?
See, if you are the expert of the sector, I would really get some guidance from you also. But if I were to use my limited understanding of the sector and what I understand, I would really say that it's what we are seeing is it is getting abated. We are seeing that especially the stock coming from in the channel is dwindling significantly. And also the China, if you see the large part of the stock that they the COVID phase is now getting released. We believe that it's a quarter or two that they would be done with that stock, and the new stock will come into the market, where they will have to also price the products as per the current market prices. So probably we at least are seeing a couple of quarters at best, and depending upon which part of the value chain you are, it may be a quarter, 2 or 3, depending upon where you are on the value chain, that the impact will get released.
Thank you for your thoughts, and wish you all the best. Have a good day. Thank you very much.
Thank you, Ramesh, and wish you a happy Diwali as well.
Thank you, sir. Ladies and gentlemen, as that was the last question, I would now like to hand the conference over to the management for closing comments. Over to you, sir.
Thank you all for joining us today on the call and being part of our journey so far. I hope we have been able to answer all your questions. If there are any that I have not answered, I promise that over the next few quarters we will do so. And if there are any specific questions which are left out, please reach out to our IR partner EY, and they will get back to you offline. I also would like to wish everyone a happy Diwali on behalf of Anupam Rasayan. See you in the next quarter. Cheers.
Thank you, members of the management. Ladies and gentlemen, on behalf of Anupam Rasayan India Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.